Good evening, everyone. Welcome to Hit the Bids closing comments here on March 5th. Today we had another volatile day across the markets, so let's jump into the charts here and see what's been happening. First up with our indexes. Today across our major indexes we saw an inside day put in where today's action was contained to our prior day's range. This is a pretty good look for the bulls and long-term value investors out there. Seeing these nice long wicks showing these lower prices being rejected and bought back up with closes back near the highs. This is a good sign and signs of at least a near-term low. Seeing this big sell-off as prices being overextended here to the downside, we could be seeing a relief rally to come from this at the very least. The S&P was just shy of a 7% pullback off of our all-time high to this recent low. The Nasdaq got down just shy of 10% from its recent all-time high. So these are pretty good deep value areas for long-term investors out there, picking up deals at discounted prices. We could see, at the very least, we are expecting a relief rally from here, but we want to see more signs of buying and price get back above our moving averages here on our major indexes. Follow through days and increased buying on volume would be a good sign to see for this big picture uptrend to continue from here. But at the moment, we are still seeing lots of volatility in this market. A near-term relief rally is what we're expecting over the next few days to week or so here. And any upside beyond that, we'll have to wait and see how the market shapes up as we start working through some of this overhead supply that we're seeing. We are seeing on a lower time frame basis, nice equal distribution across these prior days trading ranges, showing no one side is really in control at the moment. Nice equal distribution will tell us that this range will probably continue. We expect to see more volatility over the rest of the week. We do have some news tomorrow with initial jobless claims in the morning, but the big one is on Friday with non-farm payrolls and unemployment rate coming out before the market open, as well as Jerome Powell speaking Friday afternoon. These are going to be big events that the market will be watching and paying attention to, so expect more volatility as we're sorting out all that data that's going to be coming out over the next few days. As we can see, pretty equal distribution across each one of these indexes. However, we are drawing a nice hard line here at 43,200 on the Dow, which is these prior day highs as well as Friday's low. This is just showing us that there's a pretty clear line in the sand where if we're a bit above it, we should see some upside, and a nice low risk reward area, and offers below will probably keep us contained to this range. Pretty similar story across the Nasdaq and the S&P. 20,730 on the Nasdaq, and 58.70 here was today's high. If we see bids above that, expect this relief rally to start unfolding as price will start sniffing out the 6,000 area on the S&P and testing some of those moving averages, and we'll see where we go from there. Next up, we have crude oil. Today we had a nice sell-off in the oil markets as oil continues to get cheaper. About a $3 range as we dipped from 68 down to nearly 65 at the lows. Bears here are definitely in the driver's seat. Today we undercut our prior year's low by just a few cents, but new lows tend to lead to more lows, so expect the bears to keep pushing here. This market could continue to slip at the moment, but we are extended, and a relief rally could get us to pull back, find resistance, and pick up more sellers here, and really drive this thing lower and break out of the bottom of the 65 to 67 zone, which could get the ball rolling and get our oil nice and cheap throughout the rest of the year. So expect the bears to keep pushing. Any upside in the near term will be limited, and rallies are expected to be sold into. So next up, we have the live cattle market. Today, the April contract saw another nice rally. All basically across the board, we saw a nice rally as these fats pushed back up near or above our prior week's high, which is a pretty impressive snapback rally showing lots of strength from the bulls here in this market. One thing that's notable was our big picture chart showing our weekly chart that we pulled back to this $1.90 mark that that was a hard line all throughout 2024 and the late part of 2023. As we see, this nice long-term base was building up pressure all for a little over a year before breaking higher just to close out 2024 and start this new year. Just got a little bit overheated and overextended. This market got hot and took us up to new all-time highs, and this recent dip has come back, retested the breakout level, and we've seen a nice reaction from that as this week's action has already engulfed all of last week's trading range. This is a very bullish picture at the moment, so we expect the bulls to pick up the pieces and continue grinding higher after they shook off some of this volatility that we've seen over the last 4 or 5 days or so. This April contract was definitely the weakest, giving up its moving averages, but as we can see, the $1.90 mark on April supported price, as well as we're seeing $1.90 support price back into these back months as well. Pretty bullish picture. We expect the bulls to keep pushing above prior week's highs if they haven't already got there, and just keep marching higher in the near term and start sniffing out those $2 fats again. Next up are the feeders. Similar story, just a little bit stronger market. Feeders have remained stronger than the fats. We see some new all-time highs already coming up here in these back months in these fall feeders, showing clearly this is a very strong market as we went from this few dollar pullback back to all-time highs without really missing a beat. Very supportive action here as we're seeing price at the 20 and 50-day average. We saw price bounce off of those levels, and the bulls have picked this thing back up on good volume and will continue marching higher here in the near term, and no real signs of this uptrend slowing down, so we remain bullish on cattle. Last but not least, we have corn. Today we saw a nice back and forth action in a 12-cent range. We are seeing prices beat down quite a bit over the last 2 weeks about here, so these overextended prices should be seeing a relief rally to come from here. However, lots of chart crimes have been committed here on this corn market, so not expecting the bulls to pick back up the way they did in the cattle market. We're expecting rallies to be sold into, and there's a lot of volatility and back and forth that could be seen here at the moment in the corn market in the near term as it sorts out this sell-off that we've seen over the last 2 weeks. Near-term upside is possible, but the bears are definitely in control here and expect to see this thing keep getting pushed back lower. So lots of action across all of our markets here today and this week. So remind everyone to stay defensive and think risk first, and stay safe out there. But no shortage of opportunities, no doubt. So lots of news events to close us out this week, so be prepared for more volatility and stay defensive. Thanks for listening, everyone. Have a good night.